Thank you for staying with us on TVC Breakfast. Now, 4 major Nigerian banks are facing challenges as a result of the Central Bank of Nigeria's strict recapitalization policy, which could potentially lead them to losing their brand identities. Reports indicate that these banks are deeply worried following the CBN's recent approval of the acquisition of Unity Bank. As a reminder, on March 28, 2024, the CBN issued a circular announcing a new recapitalization policy for commercial, merchant, and non-interest banks in Nigeria effective from April 1st, 2026. To meet this target, the CBN has provided 3 recapitalization options: private placement, right issues or offers for subscriptions, mergers and acquisitions, and upgrading or downgrading of license authorization. However, compliance with these methods is non-negotiable, as the CBN has made it clear that no alternative approaches will be accepted. Despite submitting their recapitalization plans, the CBN seems unconvinced about the viability of the strategies proposed by the 4 banks in question. Well, joining us in the studio this morning is Omori Edogewere, a business attorney and lead partner at ENC Legal. I hope I got that name right.
Yes, you did. Good student.
All right. Good morning. Thank you for joining us. So it's been 20 years, approximately, since the last recapitalization.
Mm-hmm.
Do you think Nigerian banks are really ready for this?
Well, they should have seen it coming. The most constant thing is change, especially in the financial services industry. There's always an improvement of things, or a rejigging of the regulatory scrutiny and requirements. So I think that they should have seen it coming. But even more there in the last 2-3 years, given the volatility of the naira and the challenges it has faced against the dollar and economic issues, there is the need to have the banks, which remain a key leg upon which the economy stands, to look back at their strength base and rejig their capital requirements. So I'm sure that somehow it's, will I say, an evil day that they've been hoping, they've been postponing, but definitely they knew it had to come.
So that's why banks are going to the markets to raise a lot of funds.
Yes,
but do you
so that's
think they can meet up? Because they just have like 1 month to raise.
No, so it's a year. It's 2026. Actually, yeah. 2 years.
24 months.
24 months, yes. to raise that. So the issues are quite dicey when it comes to this. CBN has said, look, submit your plan to be able to meet this threshold. Some have submitted, and
and 2 banks have merged.
Yes, already based on that. And if you even look at the dynamics of that merger, you see that one particular bank is infusing a lot, more or less, more life into the other, which is the idea of recapitalization, to say, look, what's the use of having 20 small instead of having 5 big or 5 strong? And you find that the continued inability of our banks here to adequately operate in other jurisdictions is largely from a place of the insufficiency of our capital requirements, amongst other internal regulatory issues and the likes. So 24 months is a lot of time to prepare, but the feasibility of your plan is another kettle of fish, and I think that's what CBN is scrutinizing at the moment.
I mean, this plan, is what we really want to know, because sometimes you open your bank app and see shares like black markets. Some of these banks bring out their shares, get it, they put the deadline and all, and I was wondering what exactly is going on. To an extent, let's talk about how this has affected credit. The use of credit, SMEs in Nigeria especially make use of that facility. But now banks are sending messages to persons to even, update their payments.
Yes, because finally the money man is saying, "Fumi Owomio, bring my money. Let me store my house." So every point in time, there's always. So you see, the challenge is in the US, for instance, there's something called stress test, which is a periodic, regular activity by the apex banker, right? Federal Reserves, to review the strength of the banks. And there is a threshold that these banks must meet, to determine that. Do we really have that kind of system here? I doubt it. So what is happening is that the banks, everyone is trying to ensure that they have enough liquidity to be able to meet the requirements that have been placed by the apex bank. And so interest right now will receive a hit. But then again, you look at the timing, right? You look at the challenges we're having at this time. And if really this is really what we can muzzle, the economy, can the economy muzzle the bank saying, look, we're holding off on giving money now, because we really need to get ourselves prepared. But you see, charity begins at home. You cannot like another person more than yourself.
True. That's why I had to ask whether if the banks can handle it, can raise the required capital. Because every bank is coming up now with their share offering and all of that. And they're coming out amidst economic crisis when Nigerians are trying to gather whatever they have to feed. The food crisis all in the markets is quite high. Food prices are high and all of that. What more can the banks do apart from raising funds from the stock market from Nigerians? What more can the banks do to raise this capital and meet up in 24 months?
Okay, so there are three options. The CBN has said, look, you either raise funds from the capital market or private placement. And I think that is one of the best leeways for them, which is privately source your funds once it meets regulatory requirements, it's allowed. So you really don't have to go out and make noise, right?
So it means Nigerians will have to go for the cheaper options because several banks are bringing out their share offerings.
No, so you see, how easy is it for you to get private placement meet individuals privately to invest and all that. Now, how is it going to be to source for 200 billion, to source for that amount, that kind of money from private individuals, right? But again, this may be another window to attract foreign investment.
Okay.
Because again, you cannot overlook our numbers as a country. We've got a viable population that is healthily consuming. Financial services remain a very lucrative line of business. So it's possible that banks may also be looking at attracting external investment. But that said, what we must have now is a balance to say, look, while you are trying to save yourself, be conscious of the fact that you are still a major lifeblood of the economy. But I was talking to Uncle Yori not too long ago on this stage, morning, and I said, NPR rates have gone up again, right? Which means it's more expensive to even raise money, right? But those that can still muzzle it need that resource, need the money, because you can't boost indigenous production, manufacturing, and all that. Especially, look, we have a food emergency. If local players are able to source funds from our indigenous banks, it makes their life easier, right? If that aspect is affected, then you know that the economy is going to take a hit. You know that indigenous production would further take a hit because there will be less money in it. But I think that once this phase passes, and this is the phase of being able to explain your plan, foolproof it, and walk the Apex Bank through it, and then have a plan, a clear roadmap in place, then you can now sit back to say, okay, hey, how much do you need?
You know, you say this phase passes. Some persons may not survive this phase. We saw a figure in 2004, 2006, there are about 89 banks. But after the process, we were left with about 25. For us to, know the severity of the situation like this. Apart from the economic implication on, lending, on the economy, also on jobs, talk to us about, the potential possibility of job losses.
I think that if you study the history of mergers, go back to Access Bank and Diamond, you even go far back to UBA and STB. One major fallout of mergers, right? Let's start from mergers, is that there'll be a mixture of the workforce, but oftentimes the person with the bigger muzzle, right, or the deeper pockets takes the larger share. But remember, CBN is also a regulator, not just in fiscal policy, but also regulating the activities of entities within its regulatory oversight, right? So there'll definitely be plans in place to balance that scale, and so you don't have workforce or employees, being cut out indiscriminately. But we cannot overlook the fact that people will lose their jobs, right? That is a sad reality when it comes to issues like this. Some banks will be able to make the recapitalization, some will not, right? I think it's healthier for our economy that we have strong banks, because the idea for this is that we're going to have at least 3 trillion naira out there for businesses, for individuals to access. Banks with recapitalization are now stronger to be able to fund businesses, to be able to boost economic growth, to be able to actively play their role as is expected. And then there are options of downgrading. So if you're a national bank, you can't meet the requirements, you become a regional bank, right? That is also an option there. And really, I'll tell you one thing. The average customer really doesn't know the difference, when it comes to some of these things. We must have financial institutions that are ready to really fit the picture of the name they try to make, right? As against all the glitz and the glamour. Banks are not for razzmatazz. Banks are for the real deal, right? So it's not about media time. It's not about all the glitz. It's not about all the activity going on, right, outside banking. But do you have the liquidity? Do you have the system in place? Are you able to adequately provide and secure customer deposits? Look, we're here a couple of months ago. A particular bank was taken over, and the assets have been sold to cover the debts, right? If you go back to the recapitalization 20 years ago, right, and even before then, remember, you've forgotten the failed banks issue, right? Some of these banks were running ads on CNN. Some of these banks were having road shows all over the world. And so it looked as if they were solid until push came to shove. And you realize that all that glitters really is not gold. And you cannot afford to have that risk when you're talking about banks.
Perhaps the CBN should have explored, having this in phases. Some persons have said probably the CBN should try and get foreign direct investment for these banks if they cannot source it for themselves. I mean, whatever is being sourced is also going to be pushed back into the economy. but also looking at it in phases. Probably this benchmark 2026 can just be a phase, two years for each, rather than having these banks raise about 500 billion naira, 200 billion naira in 2 years. It's going to go back to the economy. Nigerians, the average Nigerians especially.
So it's not also healthy that in 20 years, no serious activity has gone into running a clear stress test. Because right now, in our own climes, our own stress test is recapitalization, right? That's how you know, the strength of whether this bank has strength. But what does this tell us? This tells us that maybe we need to look at a proper system, right, beyond recapitalization, periodic, where you are able to gauge the strength and ability of these banks to meet their legal obligations. But 2 years is some time to raise 500 billion. However, I think that what CBN has done may not necessarily be cast in stone, right? It may be for them to identify the strengths and weaknesses of these banks and see how they'll come and help. But you see, there's a danger of pushing very strongly for FDI into our banks. He who pays the piper dictates the tune. If I have money and my money is more than yours, I have a stronger say in what's going on. If we cannot indigenously hold the strength of our banks, then that's a big problem, right? Investments can come in, but it cannot be the mainstay of strengthening our financial institutions, right? We must be able to indigenously have banks that are solid, that are strong, and then that can compete globally. So if you look at some of these banks, right, some of these banks may not be panicking as much as others because some of them may have a global outlook. And that global outlook has earned them a lot of foreign direct investment, a lot of FX revenue, right? And that is playing clearly into their cash liquidity ratio, playing into their assets ratio, and will help them, raise money even easier. I think that for the giant of Africa, or Africa's largest economy, it's something that we should look more closely to, having our bank strong enough indigenously to be able to now play a more strategic role globally, right? Why don't we have Nigerian banks operating in first-tier countries actively? Why don't they have licenses? Because they don't meet the stringent regulatory requirements. Very stringent.
All right. For this government, you have been reiterating the fact that we're trying to move towards a $1 trillion economy. And perhaps this is part of the moves to ensure that. Let's look at other ways that we can do that, apart from this pressure on the banks.
Well, indigenous production. If we continue to import and consume, and we are not producing and exporting, it's a mirage. No nation in the world has gained strength and economic relevance by being a dumping yard and by consuming. We must start looking at boosting indigenous production. But really, right now, we have a food emergency. Boost agricultural production. Bring down the cost of staple foods, right? And then government must begin to pick certain items and commodify them. Ensure that you give all the support, investment, funding, policy backing to certain staple items so that you can boost their production for exports. For, first of all, indigenous sustainability and exports,
Okay. Quickly, before we go, will you advise Nigerians to invest in these banks, looking at the fact that this is a stress test going on for these banks, and we know that once any of them fails it, then it's a problem?
Well, will you rather keep your money in your colo? Your pen? So see, the truth is, these are the banks we have, right? Okay. What will happen is that some will profit off some that will show their ability to be stable will attract more, and those that are not able to meet that perception, and it's all about perception, right? Those that are not able to meet that perception will have a debt in their customer numbers. But the truth is, this is where the Apex Bank has got to manage this very intentionally, because you see, even with all the rumors going on, some of the challenges are having depositors saying, oh, in my bank, among the ones that have this challenge. And if you now have a panic withdrawal from the banks, you further weaken the banks, right? Further weaken the banks. And I think that's why CBN has given, look, 2 years, right? Within 2 years, do what you need to do, see what you need to raise. But banks also must be realistic. All right.
Advisable is spread your money across.
How do you know where you're spreading it, right? But NDIC must ensure that one of the things that it needs to do now is to bolster depositor confidence and let them know that irrespective of whatever is happening, your deposits are safe. Because if you now have a situation where customers go into bank accounts and start withdrawing because they are afraid of this, banks will receive a major hit, and this recapitalization will be problematic for them.
Well, that's a fine place to leave the conversation today. We still have till 2026 to, follow the trend and see most of the banks that can raise these funds. I really do not envy them.
No, but they should have had it coming, like I said. If you are in a business, you must understand your regulatory environment. You must understand what the market is saying and the body language of your regulator. And so you prepare ahead of that.
Thank you very much for joining us this morning. Business attorney and lead partner at ENC Legal, Omoroyi Edogiaweri. Thank you for joining us.
Thank you. Thank you for having me.
And up next on the show, how